This video explains the dashboard of the Capable Capital Market Neutral Investment Strategy. We have another video introducing the strategy. If you haven't watched it yet, it would be a good idea to take a look at it before viewing this video on the dashboard. We upload a new set of our market neutral strategies every day. Each video presents several dashboards, with each dashboard representing one strategy. The number of the strategy, along with the date and time it was computed, can be found in the upper left corner. I'm now going to explain all the elements shown on the dashboard. A strategy consists of a list of stocks and the corresponding weights for each stock in the portfolio. A positive weight means the stock is long in the portfolio, meaning you buy the stock. A negative weight means the stock is short, meaning you short sell the stock. The weighted value column visualizes the weights, making it easy to see whether the stocks in this portfolio are well balanced. We typically prefer a situation where each stock contributes a similar overall value and where we have a similar number of long and short positions. The resulting portfolio value is shown as a curve in the main plot, depicted in dark blue, over the last 126 days up to now. The last value shown is the most recent traded value. The motivation behind this market neutral strategy is to open the portfolio when its value is low, i.e. below the average, and assume that it will mean revert back towards an above average value. If that happens, the portfolio can be closed at a profit. However, this is not guaranteed, and losses can occur if the portfolio value continues to fall. The weights are calculated to yield a total investment volume of $1,000. In the top line here, we show the sum of all short positions, the sum of all long positions, and the net value of the portfolio. However, if you only want to invest $1,000 into a strategy, you might encounter the issue of not being able to buy fractional stocks like 1.7 or 2.4 shares. To solve this problem, we also provide weights as integer values that yield an investment closest to $1,000. These weights are shown in light blue. The corresponding portfolio value curve is shown in light blue on the main plot. In addition to displaying the portfolio, we also provide some additional measures here in the lower right corner to assess whether this specific portfolio might be a good strategy. Due to the construction of this market neutral strategy, the gradient of the portfolio value, the straight lines in the main panel, should generally be close to zero, but this is not always the case. We also show the standard deviation of the curves. We typically look for positive, but overall not too large gradients, and we look for a large standard deviation. A large standard deviation indicates that the portfolio is fluctuating strongly around a mean value, which could lead to larger potential profits. The gradient and standard deviation values in dark blue correspond to the exact weights, and the values in light blue correspond to the integer weights. Finally, we compute two measures, consistency and stability. Consistency is a measure of how well the selected stocks within this portfolio fit together, meaning how similar their time evolution is. Consistency is a value between 0 and 100, where 100 means the stocks behave identically and 0 means they have nothing in common. We are looking for a high value here. Stability measures how strongly the portfolio value depends on the weights. This value is computed by slightly changing the weights and calculating how much the portfolio changes. Ideally, the portfolio value should not depend strongly on the exact choice of the weights. Some changes in the weights should not lead to drastic changes in the portfolio value curve. Therefore, we're looking for a low value here. Overall, to judge whether one of these strategies could be interesting for investment, we are also looking for a rather periodic behavior, to that which suggests a good chance of mean reversion. However, if the curve is very irregular, it may indicate a less reproducible behavior with lower chances of mean reversion. You might also want to wait until you actually see the first signs of mean reversion, as in this example here. We hope this video helped you understand how to read the dashboard and that the dashboard will be a valuable tool for your investment decisions.